Hello, everyone. Welcome back to our series called Quants Worth Following, where we highlight amazing people in the quantitative trading industry. So today we have with us Petra Bakosova, who is the CEO of Hull Tactical. I should mention that Petra joined Hull Investments back in 2014, where she worked on its proprietary trading firm, Ketchum Trading, before transferring over to its quantitative asset management arm called Hull Tactical Asset Allocation. So my first question for Petra, I'm actually curious. I know there's a lot of stereotypes associated with quants. What are some unusual things about your work or your background that people might be surprised to hear?
First of all, thank you for having me on this show. Very excited to be here. I think the first stereotype that comes to mind about quants is people assume we spend a lot of times working on models, when everybody who's ever tried to be a quant knows that really we spend most of our time cleaning and validating data. So just to put it in perspective, just last Friday, I was running a regression on 3.3 million data points, and I was seeing a T-stat on one of the indicators I didn't like, and then I look at the data, removed 33 outliers out of 3.3 million data points, and my T-stat went from 0.5 to 350. So that should tell you about how we really spend our time.
Absolutely. I was going to say one of the biggest surprises for me, also having worked in a smaller quantitative trading firm, was almost like the amount of time we spent on operational things, whether that's data cleaning or finding the right brokers, the right service providers, dealing with a lot of those service providers as well. I think that the surprise there is just how much time it took behind the scenes to even set up an order management system, set up our data feed handlers, to be able to clean up the data, to validate what's going on, all that kind of stuff behind the scenes that had to happen first before we could even build a model. So yeah.
100%.
Amazing.
And another thing maybe worth highlighting is it's very topical to talk about AI, and is AI going to steal the quant's jobs? Is it going to write code for us? And that, I would say also, I don't know if people realize how much of our work is not figuring out what to do, is figuring out what not to do. It's not that we can't type code fast enough. There's always a million things we want to try, and the hardest part about being a good quant is figuring out what is the right thing to work on.
It's
So no
amazing.
concerns about AI.
I actually wanted to mention this as well, which is, you're one of the few women that I know who are working in the quant space today, and maybe would love to hear if you had any advice for other women and minorities, who are looking to potentially enter the industry.
I don't know that the advice would be any different for women and minorities other than anybody else who's interested in entering the industry. I do think our industry, not without its problem, but it's very meritocratic. People care about, your quant skills, and people care about your ability to put out good research and good work. One thing that I always found worked well for me was coming to new environment and new firms. Don't look for the flashiest project that every senior person's already working on. See what are some of the new initiatives, some of the initiatives that people are maybe overlooking, and try to figure out which ones of them could be big. That was sort of my backstory. At Ketchum Trading, there was a prop trading firm, and there was this little ETF project that sort of nobody really cared about. When I showed up, I was like, oh, this is really interesting. Let me have a look. Let me see what I can do. And then Hull Tactical has evolved around this ETF project, and the ETF has been in the market for 9 years now, and going very strong. So it really evolved as my career evolved with it.
Amazing piece of advice about doing things that maybe there's a lot of shiny objects and really exciting projects. I'm sure today it would be AI with a lot of these funds, but at the same time there's a lot of other projects that, you're right, less people want to take on. And I think that you're right, that's a really great area to be able to actually stand out and do projects that a lot of people might not know about, but then once they happen, it could be a really great stepping stone to more opportunities. So thank you for that advice. I guess would love to learn about, if you're allowed to share the divide about your day-to-day, right? How much divide between your research? I'm sure you're in meetings all the time, and any other types of work that you do. But yeah, would love to learn more about what is it truly like to, work within your company.
Sure. So I remember, Christina, when we met, we were at the Quantopian panel. I think, we compared notes about what we worked on back then. And it's funny to look back and see how much my role has changed. So back then I would have told you, oh, I spent about 50% of my time writing code, and the other 50, I do some trading for the fund, I do some operations, I talk to some of our clients or counterparts, and now the split would be very different. So we have grown as a company. We now have 15 full-time employees. So sadly, I spend a lot less time actually writing code and a lot more time thinking about how to get people to talk to each other without keeping everybody in meetings all the time. So trying to optimize the flow of the information within the company and making sure, we work on the right projects and people stay on top of what everybody else is working on. It's a lot of what has changed, and our project has changed too. Back in the day, we were working on just forecasting the returns of the S&P 500 market and just in aggregate. And now we sort of evolved and we have a big proprietary trading unit that specializes on all US listed equity options. So we went from having a small data problem to having a big data problem. I remember thinking, back then I was like, oh, I wish I had more data. I could build fancier models and I wouldn't have to worry about overfitting all the time. And now we have a big data problem, and the grass really isn't greener on the other side. It's very different, but in an exciting way. So there's a lot we can do, and there's a lot of opportunities we can take. So that is very exciting.
That sounds amazing. I was going to say one of the lessons you alluded to is I realized one of the differences between a junior level employee and a senior level employee is that a senior level employee can take a vague problem like how can we bridge the gap between teams and turn that into a bunch of concrete tasks and solutions essentially. Whereas I feel like more, at least on our team, the expectation is junior level people aren't expected to know the answers like that. They are expected to be able to execute on those ideas but not to be able to be the architect and come up with those solutions. So it's really awesome to hear about how your work has changed over the decade as well. And same with me, back then as well, more focused on diving deep and getting my hands dirty on all of the work involved. And then today it's more, for us, it's actually how do we solve user fraud? So it's like issues like that we are like, oh, we have to face, and deal with that in the data space as well. So we also have, in our own sense, big data problems in a slightly different way. I guess, would love to learn more if you have any favorite kinds of resources, whether that's websites, books, podcasts, videos, newsletters, anything that you've enjoyed or that has helped you in particular to get to where you are today. I would love to learn more.
Sure. I can mention a podcast and maybe a couple books. I'm thinking more, I'll mention some of my favorites, not necessarily the most useful, but something that I think it's just kind of fun to check out. So for the podcast, I've been listening to Bet the Process, which is not a finance related podcast about advantage players and sports betting. And I think there's a lot of parallels between what people do in the sports betting and what we do in the financial markets. And it's a little bit of a plug because both our founder, Blair Hull, once was a guest on the podcast, and even I have an episode. So if you search hard enough, you'll find it where we talk about the parallels between finance and sports betting. And then as far as book goes, I think if somebody wants to go into sort of like a hedge fund and asset management industry, a very interesting book is Sebastian Malby, More Money Than God. It kind of talks about the history of all the hedge funds, and it makes you think about all now the idea sounds simple, but somebody had to be the first one to figure out oh, value investing is a thing. And somebody had to be the first one to figure out oh, trend following is a thing. And it's very fascinating to kind of go through the history and realize how not really long of a history it is, but how fascinating it is. And then maybe just two econ books, Richard Thaler, The Nudge. I think that's great for just working with people and managing people. And maybe one of the books that got me interested in economics in the first place was Malcolm Gladwell's Free Economics. So that's a great one too.
Amazing recommendations. Yeah, I gave my brother that book, More Money Than God, for one of his birthdays many years ago. That was a really, really wonderful book. So thank you for those recommendations. I guess maybe just a final question. What kinds of trends do you think will happen in our industry over this next decade?
So maybe I'm going to sound as too much of an optimist, but my prediction will be, and maybe this is wishful thinking, is maybe we're going to see a reversal in this consolidation trend we've been seeing. I feel like what we've been seeing a lot of small firms disappearing and everything, the industry seems to be consolidating into just a few big trading firms and a few big asset management firms. And I'm sort of hoping, some of the work that you do with Databento, with democratizing access to data and making the data easily available, and maybe some of the work we do at Hull Tactical, deploying quantitative strategies that traditionally would be a 2 and 20 strategy into an ETF, and publishing a lot of our trade secrets into published papers. I do hope that we're going to see more of this democratization of access to the market and access to the data and access to research. And then I'm hoping we'll see more market participants and more exciting new firms in the industry.
Me too. I really hope that we see more startups that are able to enter the financial industry. And I think you're right. A purpose, and one of the reasons why we're doing this series is actually because, when you're trying to enter any industry like sales, right, there's millions of online resources, websites, courses you can take on how to do sales. But for quant, I don't think there's yet that many really solid resources on the internet on how do you enter this industry, and or how do you start even a firm in the industry. There's not that many resources. So hopefully this will help a little bit, and we can see hopefully what will happen in the next decade. So thank you so much for being a part of this again. And it was really a pleasure to talk to you today.
Thanks for having me, and it was great talking to you.